Welcome to the latest Motley Fool Scoreboard. I'm Anand Chokkavelu. We've got longtime fools, Jason Hall and Lou Whiteman, giving a 1 to 10 rating to British tech company. Yes, British tech company Endava, ticker symbol DAVA. We'll talk about the business first, including factors like industry and competition. A 10 is invincible, a 1 is hopeless. They've both given 7s. Lou, start us off.
Yeah, of course it's a British tech company. The Brits, we know our tech, right? So I generally think favorably of consulting businesses. There's a lot of stickiness there when dealing with large clients, and Endava has done a good job kind of establishing itself with these large clients, especially in the financial services industry. Endava is positioning itself as a tech-first company that can dinosaur-proof the dinosaurs, kind of bring these old economy companies into the present, if not the future. The knock here is there's a lot of competition, and Endava needs to do more in terms of product and geographical diversity. It's still early on, a lot of sort of things that can go wrong. A work in progress, but I like how they position themselves. So a solid 7.
Yeah, I think Lou's right. I will say when you said Anand, when you said British technology company, I'm like, wait a minute, we're not doing ARM Holdings. What's going on here? One of the things I like about Endava is geographically they're relatively diverse. They have customers or clients all over the world, and most of their customers are actually in North America. But thinking about the tailwinds of the business, technology consulting in particular has a lot of those. But the reason I came down with a 7, I would love to give this business a higher score, is cyclicality, customer concentration risk, and just competitive risk. The industry broadly, tech consulting broadly, has done really well. The company's earnings generally across the industry are up and they're good. That hasn't happened with this particular business. And I'm also concerned that if you look at its customer counts, its client counts, total client count has declined over the past 3 years. And clients that are spending £1 million British pounds a year or more has also continued to decline.
And maybe I should have been saying British consulting company, but maybe that's not as. Then they'd be fighting with Irish consulting company Accenture, if you believe those headquarters.
Yeah, they're about as Irish as Lou is English.
Yes.
It's fair.
Management. A 10 is Warren Buffett. A 1 is Homer Simpson. Lou's at an 8. Jason's at a 7. Why the 8, Lou?
Founder CEO. I really like this story. John Cotterell, he's CEO. He founded a business, 14% stake, about half the voting power. He has a great resume of consulting experience before forming Endava. Basically started the IT outsourcing trend in a former life. I'd also note I really like he's not, for everything he is not the chairman of the board. That's Goldman's Trevor Smith. So there is a counterbalance there that you don't always see with a founder CEO. A little less ego than there could be. A lot to like here. Management's a strength.
Yeah, I'll build on what Lou said. It's not even just the top leadership. Almost the entire C-suite has been around for a decade and in most cases longer. But the reason I gave a lower score is we have to hold them accountable to the business performance. Frankly, the financial results in recent years, not good. And a lot of value, shareholder value, has been destroyed over the past few years, following the first 5 years as a public company when a lot of value had been created. So bringing it down because the results, need to be reflected in the score.
Financials. A 10 is a fortress. A 1 is yikes. Both of you were at 6, Lou.
Yeah, here's the rub, right? Everything looks so good, but they've run into, as Jason said, some really hard times of late. Customers, part of this is macro. Customers started pulling back, fearing a hard landing. I think you just saw less spend across the board. But look, it hit Endava particularly hard. The stock fell, I think, about a half, and the results haven't been that great. Stock was up big in November, despite a 5% jump in revenue and a big decline in adjusted operating profit. Just kind of a relief it wasn't worse rally, which I don't like to see. There is more debt on the balance sheet than cash and a lot of goodwill through acquisitions, but nothing they can't handle. Looking at the financials right now, it's hard to get excited or worried, so a 6.
Yeah, the thing too, just building on what Lou said, we're seeing margin compression. Operating expenses have continued to increase while revenue is getting squeezed. We look at all of its peers. They're growing their top lines either faster than revenue or at a similar amount. So looking further, we're not talking about just financial shenanigans with markdowns or non-cash things that are happening. Cash flows are taking a beating too. And that in particular, I think, is worth noting. Now they are still spending money on the operating side, right, to make sure the business is there when demand accelerates again. Digital transformation is real and it's going to continue to happen. But the one concern is we look back in time a little bit. If you look at the years that they spent the most in CapEx, those were the years that they also generated the most free cash flow. So there's real concern about the quality of their business, in at least the way it's perceived by clients and potential clients. That's been an issue and it's affecting the financials.
Well, let's talk valuation, Jason. How well will Endava stock do over the next 5 years, and how safe is it? 10 is a sure thing, a 1 is a lottery ticket.
So with the concerns and how I've kind of beat up the business here, I'm a shareholder, and I do think we're kind of at a little bit of a nadir with cash flows and earnings. And there are some signs that the turnaround is starting to kick in. The customer average spend, again, the average number of clients is continued to decline a little bit, but the average spend is stabilizing, and their top 10 customers are spending more money again. So I think those are positive. So my safety score is a 6. I think the business is probably reasonably safe. For me, a 6 means you're almost certainly over 5 years going to make some money, maybe not a lot, but should be a profitable investment. And I do think where the valuation is right near and where they are in terms of being able to turn the business around, I think we could see 15+% in returns going forward.
Yeah, very similar. I mean, to me, this is just a simple question. Is this a speed bump on the road to success, or is this reality? And I tend to think that things are going to change. Endava's been a good company caught in a bad period, some macro, some just kind of growing pains. I think the business can and will take off, and hopefully the stock will go along for the ride. So I am 50% plus too, but I am only a 5 because I will admit that this is only me saying I think. And if it doesn't work out, if it is just kind of who they are, it could be dead money for a while. It's not going to zero, but if I'm wrong, it's not going to be a great investment to hold. I'll admit that.
Well, top it time. Let's see if you like anything better. Jason, start us off.
Yeah, so Lou's going to go in a good direction with broad exposure and a really high quality company. I think Cognizant is interesting. So it's a good bit bigger than Endava, a lot smaller than some of the giants, though. It's also it's going through a little bit of its own kind of turnaround, more of an optimization than kind of some of the bigger problems that Endava is dealing with. It's the key, though, is its financial results have really held up a lot better. But if you look at the valuation, it looks really relatively cheap. I really like their studios approach. They have this way that they build the pools of talent and teams to lead client projects, with making sure they have really skilled subject matter experts across disciplines based on that client's needs. I really like their approach a lot. And I think the market might be giving us a good time to buy Cognizant too.
Yeah, jumping across the Irish Sea, we've mentioned them before, but Accenture is sort of the opposite of Endava. They held up better through the slump. It's the power of diversification. They are the biggest name in the field. They have all the advantages that Endava has. I would definitely say, though, it's a lower risk and probably lower return, given that they are a $240 billion company and Endava is less than $1.5 billion. So maybe a lot less upside, but definitely the stable boat in this harbor.
Well, thank you to both Jason and to Lou. They've given Endava a solid overall score of 7.2 out of 10, short of that 8.0 that would force me to own shares, but clearly they both see high potential upside. It's just risky upside. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Snowflake. Till then, Fool on.
All right, we ready?
All right, here we go. Endava.
Do we have to talk about Endava? We can talk about Coen Brothers films.